With the stock market still turbulent, many people have been directing their retirement investments toward bonds. But are they as safe as you think? Joanne Lipman is editor-in-chief of Conde Naste Portfolio, and she's here with some insight and advice. Good morning.
Good morning. Good
Do you know
here.
your muni bonds from your Treasury bills? I mean, that's kind of crazy. There's actually a lot of stuff out there, right?
There's an awful lot of stuff out there, and there's several investments that have traditionally been considered really safe.
Municipal bonds to start with, right?
Municipal bonds are one of them. Now, traditionally, they've been considered very safe. Low risk, low reward. Municipal bonds are basically, that's when towns, states, cities, you are lending them money.
Right.
And they're using,
so they can build schools, and they can build
schools,
sewer systems,
lines,
all that stuff.
All of that sort of thing.
Not very glamorous. However, is there some risk involved now because some of these states, some of these municipalities, they're hurting for dough?
You are so right. You are so right. There are some risks involved that were not there before. And for one, you know, these toxic assets, toxic investments that have brought down so many of the banks.
Right.
Turns out that the municipalities and the states also invested in some of these. So there's a hidden risk for you.
Unbelievable.
And then you've got also budget shortfalls in a lot of states and localities. And you've got places like California and Detroit that are having a lot of trouble.
Really up against the wall.
Right.
Is there a way you can protect yourself from those kinds of things?
You know, the best thing you can do, as with all investments, diversify, diversify, diversify.
Right.
So you can go into a municipal bond fund, for example. That would spread your risk.
It spreads the risk around.
Yeah, absolutely.
Even though there's not supposed to be any risk there, but we can spread whatever risk is there around.
Exactly. And if you do go into a single fund, generally states are going to be better for you than like an obscure sewage authority. And you know, states really are the ultimate too big to fail.
There you go.
Yeah.
And finally, let's go to Treasury bonds. Always thought to be a very, very good investment, very safe place to put your money. Still a good idea?
Well, you know, treasuries are the ultimate in what has always been considered risk-free investing. And it is true that there's very little risk in treasuries, but for the first time we're seeing that there is some risk involved.
Yeah.
And the issue there is that you know, first of all, when the financial markets melted down last fall, people poured into treasuries. They took money out of the stock market, out of real estate. They poured into treasuries. So you have this vast amount, and what that did is it brought the yields way down.
It's like this.
It's like nothing.
Even below this, right?
It's below that.
Right.
Exactly right.
Yeah.
Yes.
So is it still a good idea, or in the final analysis with treasury bonds, should you get in, get out, or is there a safe play here?
You know, they're still safe. The way to stay safe with treasury bonds, though, is to stay with the short-term treasury bonds. So that's like, you know, you can get anything from 30 days to a year, a couple of years. That's okay. Stay away from the long-term 30 years.
You know, the whole mattress thing is still sounding pretty good to me, because didn't they have trouble trying to sell some of them yesterday? They did.
Yeah. Yesterday, that gives you an indication. Look, Warren Buffett, the Oracle of Omaha, the great investor of our time, said last month that we're in a treasury bond bubble.
There you go.
And he had some concerns that could be equivalent to the dot-com bubble.
Into the mattress it goes. Joanne, thank you so much, as always.